The natural, genuine behavior of the market is to buy gold at any price and to sell silver if the economy looks weak. And so you get this, right? And then you get the funds selling silver harder and harder because they think they're making money. And this ends with those 6 to 7 move rallies in silver. Now, is one of those going to happen tomorrow? No, but I'm saying this is the immovable object is the gold bid. And as long as that immovable object remains immovable, you're going to see this happen to silver. And then when gold takes another leg higher, you're going to see silver rally. So it doesn't have to be manipulation. It is gamesmanship.
Silver could see a significant bull run, given that the scenario still looks bullish for gold and the likelihood of a rate hike is increasing. Silver historically outperforms gold in a gold bull market, with gold charting a gain of around 40% during the pandemic and silver up a whopping 141%. VinceLanci, the managing partner at Echobay Partners LLC, brings a wealth of experience in financial markets. Based on fundamentals, VinceLanci explains that a strong gold bid will pressure silver, but significant silver rallies will occur when gold rises. He states that gold buying is an immovable object, driven by the upcoming BRICS Summit rather than the election. Financial experts predict that the price of gold could reach up to $5,000 per ounce by the end of 2025, while silver might see a rise to $500. These projections are influenced by the anticipated increase in gold reserves by BRICS nations, creating new opportunities and challenges in the global market. Buying power of gold and silver in 2025. In his analysis, Lanci predicts wild swings in the gold-silver ratio, explaining that bullion banks sell silver to lower gold prices when gold rallies. He adds that real market behavior prefers gold as collateral in a multipolar monetary reset, while silver is seen as an industrial asset during economic downturns. Silver prices reached their highest peak in January 1980, at around $49.45 per troy ounce. Conversely, their lowest trough was in February 1993, at around $3.56 per troy ounce. Silver prices fluctuate based on multiple variables, such as supply and demand, geopolitical events, currency strength, economic data, and changes in investment trends. The historical spot price of silver has been characterized by high volatility, with fluctuations over the decades. Regarding the current recession, Lanci notes that it prompts silver selling, with bullion banks participating due to bearish views on gold. Now we present the clips of VinceLanci's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Gold's buying is an immovable object. They need to buy it between now and the BRICS Summit. It's not the election, it's the BRICS Summit that they're looking at right now. All right? Sorry about the noise. Gold's buying is an immovable object. They need to buy it. They're here, wherever that is. They're buying it. They're not going away. Yeah, they may lower their bid, they may go raise their bid, but they're buying it, right? The bullion banks also need to buy gold so they can sell it to other people. The bullion banks are the irresistible force that need the market to go down. They can't sell gold anymore. They are selling silver to help them facilitate buying gold, okay? So the immovable object is gold. The buying's not going anywhere. The irresistible force are bullion banks selling silver so they can buy gold. And the result is, and here's where it becomes practical for everyone. The result is, we'll go to daily. The result is wild swings in the gold and silver ratio. The result is when gold rallies and the buying stops, the bullion banks can no longer just nakedly sell gold like they used to, because there's real buying, and that's the immovable object. And so what they do is they will sell silver. Literally, they will sell silver in the hopes of dragging gold lower. And in doing so, the whole market will back off. Now, taking the paranoia out of it, the market is also a they. And the market is saying, you know what? We need the gold for the multipolar monetary reset. We don't need the silver because of a recession. So there are two players in the market, forgetting the tinfoil hat stuff. We need the gold as collateral now. We don't want bonds anymore. Let's buy it. We like the silver, But if China is going to weaken and the US is in recession, let's look at it like it's industrial. And so the natural, genuine behavior of the market is to buy gold at any price and to sell silver if the economy looks weak. And so you get this, right? And then you get the funds selling silver harder and harder because they think they're making money. And this ends with those 6 to 7 move rallies in silver. Now, is one of those going to happen tomorrow? No, but I'm saying this is the immovable object is the gold bid. And as long as that immovable object remains immovable, you're going to see this happen to silver. And then when gold takes another leg higher, you're going to see silver rally. So it doesn't have to be manipulation. It is gamesmanship. These people are playing a game in the market. They lose money when the market rallies, and they lose money big. Silver rallies 5, 6, 7%. But right now, I'm saying to you that the world is looking at, again, recession. They're selling silver, right? Are the bullion banks also selling silver? Of course they are. Of course they are, because they're bearish gold, but they can't sell gold because there's just too much buying. Anyway, so that's it. I think between now, all right, so just to tie all this all together in a more organized bow for you, since this is very extemporaneous, between now and the election, the buying in gold will remain incessant. It may be lowering of its bid because price is lower in silver. It may be raising of its bid as the clock gets closer to the election, but it will not go away. Silver, on the other hand, will rally when gold rallies too much. And when gold goes sideways, silver will go down because people are looking at it saying, recession, I'll sell silver. But when gold rallies, they go, recession, maybe I won't sell silver today. Okay, so between now and the election, gold will have a bid. That bid may be here, the bid may be here, and the bid may be here. Between now and the election, silver will have an offer. The selling will be into weakness or not at all. Okay? If silver drops, they'll sell more of it. But if silver rallies on the back of gold rallying, 10% moves are going to start happening. So that's it. That's the gold and silver relationship.
VinceLanci discusses ANZ's mid-year commodity report, predicting a boost in silver investor demand as the gold-to-silver price ratio has decreased. However, Lanci warns that weakening industrial activity in China will pose a headwind for silver. China's economy grew by 4.7% in the second quarter, slower than the 5.3% increase in the first quarter, and below the expected 5.1%. This slowdown is attributed to weak consumer spending and a prolonged property market slump. As a major user of silver in electronics, solar panels, and automotive parts, China's economic struggles could negatively impact silver demand and prices. When demand for gold starts rising again, silver could outperform, as the gold-silver ratio will likely decline. In this scenario, speculative traders would rush to buy relatively cheap silver to capitalize on the upside moves in gold markets. Thus, watching gold-silver ratio dynamics is extremely important for success in silver trading in 2024. Regarding silver imports, Lanci observes that China's silver imports are picking up, which he finds interesting and likely investment-related rather than industrial. Let's get back to the interview.
ANZ puts out a mid-year commodity report, and in it they go through every commodity, and you can see by the cover page, this year is very energy-oriented for them, but when is it not in this world? However, they have they have silver, gold, and copper to discuss, and it's a very heavily chart-laden book, but it's not without some good points. So most of the precious metal section is developed to gold, is focused on gold, but there are two comments on silver that I think are worth mentioning here because they tripped an alarm bell for me. All right, so anyway, first of all, the backdrop I'm reading this is I'm worried about Chinese recession or deflation pulling industrial demand from silver and investment demand from silver, even as copper has already started crapping out. All right, so even as gold is rallying. So here we go. They believe investor demand for silver is picking up as the gold price rises. Now, you may say that's obvious. It's not obvious. See, gold gets to a certain price, And people, not just you and me, big funds say, you know what? I need to own some precious metals, but gold's gone too far too fast. I'm going to buy some silver. And that happens. And that's when we see those 4, 6, 7% spikes in silver, because these guys decide to buy and they cause all the guys who've been shorting it for the last 6 months to cover. They believe the gold to silver price ratio has normalized 77 to 78. Well, call it between 75 and 82. That might be right. However, and this is, when they said that, I'm like, yeah, this is right. However, weakening industrial activity in China will be a headwind if the gold price consolidates. Again, another seemingly obvious statement, but it's not. What they're saying is we do not have a global economy, specifically China, a global economy that's going to put tailwinds behind the silver price. So silver will outperform gold on the upside in spurts, but not as much as it would if there were economic tailwinds. So the U.S. is headed towards recession. We've been hearing that for about a year now, but I think it's happening now based on the fact that the Fed might actually ease. China, while they had a nice little pop, there is back into recessionary path. So just keep in mind, if gold falters, silver is not going to hold up. That's a macro comment. But the micro comment is what I'm going to get to next, and that is they're selling silver to buy gold. We'll get to that in a second. So here's a couple charts. China's silver imports are picking up. This is what caught my eye. It's not bigger. Specifically caught my eye because, well, why are China's silver imports picking up if they're struggling? I think that's interesting, and I think that's investment related, not industrial related. So I'm looking for that to continue even if there's a recession. Also, this is at the same time India's silver imports are slacking off. Remember that. Remember, China was buying gold, India was buying silver. Now China is buying silver and India is buying gold. These guys are working in tandem, I think. I mean, the evidence suggests it. You'll never have proof, but I'm working with that theory. All right, on gold, moderating U.S. inflation and a weakening labor market are bolstering the case for 2 cuts this year. That's a good assessment. Any delay in the Fed rate cut to beyond September will trigger a sell-off. Right now, the market is discounting a almost 100% probability of a rate cut. Doesn't mean it'll be a rate cut, just means the market thinks there will be. If the Fed does not cut rates, or the Fed gives an indication that they're not going to cut rates, well, then you got a problem. And that problem is they're going to delay the rate cut. It's coming, but they'll delay it. Okay? So gold is vulnerable to that. Meanwhile, gold ETF holdings are recovering. So there's investment money coming back into the market.
Historically, silver has outperformed gold during gold bull markets, with significant gains observed in past bull runs. However, weak Chinese manufacturing data raises concerns about silver's industrial demand, contributing to silver's underperformance compared to gold. How do you think the anticipated rise in gold reserves by BRICS nations will impact silver's long-term growth potential? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.